Hello YouTube, welcome to Big Mike Beard Wisdom. So, it's been probably 4 months since the last time I did a stock market video, and in that one, I just try to pique everybody's interest in it just a little bit. So in this one, I'm going to start talking about a couple different things, but still not going super in depth. The big reason that I kind of want to make a stock market video though, is that there may be a dip or a drop coming soon. And it's one of those things where if you can be in it and investing during it and make the right investments, you can actually come out pretty good. If you look into stock market investing at all, you've probably heard something about buying the dip. And of course, we're not referring to chip dip. Really shouldn't have done this video right before lunch. But to buy the dip is basically a term that's just saying that you're watching a stock, and as the stock dips or the value goes down, you start buying it, and you buy it as it continues to dip. And in doing that, the value that you're purchasing it at gets lower and lower as it averages down. And then eventually the dip will end, and it'll start to rise again. And hopefully it rises past your initial purchases, that way it ends up looking really good. So in the first video that I did, we basically talked about where I was at on my learning stock account that I have with E-Trade. And this was at the beginning of March, and basically the account was almost up to 8 grand, so it was at 7,832 with an unrealized gain of 890 and a day's gain of 166.90. Now, if we were to look at it today, the account's grown quite a good bit. So the account is now at $9,299. The total unrealized gain is $1,769. Days unrealized gain is down about 20 bucks. So as the day is progressing, it's not doing super great. There's only been $300 of my personal money invested in the account because I only put about $100 a month in it. If we would have taken the $7,832, just add the $300 that I've invested in it so far, we would be at $8,132. So there's been quite a lot of growth in the market and quite a lot of growth in the stocks that I've had. But this account's been around since I started it back in 2019. A really good example of buying the dip would be the Roth account that I have. Here's the picture that I used in the last video. So again, back from March 1st. The Roth account, I had basically invested in either March or April of 2020, so when the market was way down. And I put $500 into the account. Of the $500, I only invested $480. But in about a year, that $480 that I had initially invested wound up growing up into $635.73, giving me a pretty good unrealized gain. And the stocks that I had purchased were dividend paying stocks, so it actually built up money that entire time. And if we were to look at it now, the account value is up to $706.78, a total unrealized gain of $172, and just like the other account, it's likewise down for the day with an unrealized gain of about $2 for the day. But you can see my cash purchasing power is down a good bit. And it's actually because I took some of the dividend money I'd gotten and reinvested it, hoping to help grow a dividend snowball. But basically, from March 1st to June 24th, without doing anything, the account has grown about $70. So if we take a quick look at the S&P 500, we can kind of see that in February, March of 2020, the stock market really took a hit due to COVID. But as the market recovered and as the world more or less recovered and rode out COVID, the stock market really recovered quickly. So anything that was bought during that big dip could be well past where it was originally by now. And it's kind of one of those things where you can see on this chart that over time there's a fair amount of dips, there's a fair amount of peaks and valleys. So looks like towards the beginning of 2019 there was a pretty good peak and valley. So that would have been a great dip to buy. Obviously, the COVID pandemic stuff was an amazing dip to buy in. But even like late August, September of last year, there was a pretty good dip there as well. The big thing though is that you want to try and make smart decisions, because some stocks haven't recovered from COVID, some stocks have, which brings us to another term, and it's one that's kind of strange. So this is basically sell in May and go away. And basically, if you look at some of this stuff, you can see that over like the summer months, there's a fair amount of volatility. So there's a fair amount of like peaks and valleys in the summer months normally. And that's what that saying is meant to help you try and avoid, is that volatility. So essentially, you own the stock until about May, you dump your stock or a fair amount of it. That way you miss all the volatility, all the up and downs, all the weird swings, and then reinvest toward the end of the year. So like October-ish. And in that way, especially I can see like a retail stock, as it ramps up towards Christmas, I can definitely see a retail stock would be improving as, you know, people are expecting Christmas sales to be coming through and for high profits to be reported. But for me, I've never done it. So it's kind of one of those things. Never tried it. This is a big enough saying that maybe there's plenty of people that do it. And because of that, it may cause dips in May or dips in the summertime in general. And it might be one of those things where that might be a great time to buy because a bunch of people are trying to sell out of their holdings and cause the stock market price to dip on that particular stock that you're looking for, making a great time for you to buy. And one of the reasons why I don't really do the sell in May and go away is that my main like investment strategy is based on dividends. So what I'm doing is I've purchased stocks that pay dividends. And what happens is that as you own a stock on a particular day, you get paid that dividend. Now you can sell it the very next day, you still get paid the dividend, but essentially you've now sold the stock. And different stocks pay different ways. So some of them are monthly, some of them are quarterly, some may do a special dividend yearly. But this is where I was at on March 1st. And stuff has changed quite a good bit since then. So at the time, in 1 year, I would have made about $356.24 off of just dividends. So ignoring the growth. So this is purely money coming in thanks to owning a stock. And if you look at it, it's kind of high in the $40 range in the March, June, September, December months. And that's due to quarterly payouts. And where I was at stock-wise, I had a lot of stocks that paid in those quarterly months. Whereas the quarterly stocks that pay out in like April, July, October, and January, I didn't have quite as many. And then same thing with May, I had even less. And if we were to look at today's estimate, it's grown quite a good bit. So I've increased it since March 1st to today, which is June 24th, about $70 of estimated income to come in. And I've decreased my holdings in like March, June, in like the March, June, September, and December months that pay dividends. I've sold some of those stocks in favor of some other ones. And I try to balance these out a little bit more. But the big growth here was getting every month above $30. So essentially I now make $1 a day. And because I'm trying to push the dividends so hard, so I really don't do the sell in May and go away. and I try and watch for dips. That way I can try and purchase at a good price, and then as it comes back up, I reap the benefit of it. And for me, the reason why I like dividend investing is that I can continually invest these dividends back into the market. So where I only invest $100 a month in the stock market, this is like an extra free 4 months of investing that's not coming out of my bank account, that the stock account is generating all by itself. I kind of think there's going to be a dip coming soon, just because between the stimulus and the economic stuff that we've done as a country to try and bolster our economy, I think some of it might cause a dip soon. And if you've got some money that you can put into the market during that dip, and you pick the right stocks, once they recover, you could be well ahead of where you were when you started. Hope you guys enjoyed the video. Feel free to like and subscribe, and I'll check you guys next time. Ooh, that might be angry. Oh man, still weird just talking on a computer. But it's only been, let's see, March, April, May, June, July, or June. You can see that the stock market trains. So if we take a quick look at the S&P 500,